$20 and thought you had bread. Next thing you know, you spend the $20. Now you don't got no money, bro. Let's talk about cash flow, bro. Look, you ever made some money and you feeling good, but you don't know where the income from. You don't know how to get more of it, but you just made some. You're not worried about making more, and then you lose it in the 2 days, and now you ain't got no money, but you still feel good because you're like, dang, I had some money on me. Feel me? That means you know how to make it. Feel me? Doing the course, man. Look, we're gonna read this first. Income. Look at it as more than just a paycheck. It is the foundation of your entire financial plan, influencing your ability to spend, save, and invest. Gross income, your total earnings before any taxes. That's gross income, your total earnings before any taxes. Net income, take home pay, the actual amount that lands in your bank account after all deductions. This is the real money you have available to spend. Understand? Understand? That's gross income. The real money you have to spend. You know? Usually when you get the money, you want to pay off what you want to pay off. The liabilities. You know, it's all temporary, but the long-term things you want to pay off first. Feel me? Then you're going to have gross income. No, you're going to have net income. The net income is take-home pay. Feel me? The actual amount that lands in your bank account. How much you're worth. Managing your income. The 50-30-20 rule. 50% should go to the long-term liability, like rent, housing. 50% of net income goes to needs. 30%. Okay, let me restart, man. Managing your income, right? The 30-50-20 rule. 50% of net income goes to needs. 30% to wants. So what do you want? I know what I want. Feel me?
I'm not hurrying.
This is what I want. Right? 30% is the want. I want my gas, my food. That's what I want. My gas and my food. Okay? 20% goes to savings or debt repayment. That's the 50-30-20% rule. 50% of net income goes to needs, 30% to wants, 20% to saving or debt repayment. Next page, man. Cash flow. If income exceeds cash flow surplus, this is all in the bank. This is all supposed to be certified in the bank account. But if you got money on you, you feel me? Figure that out. But this right here is all supposed to go to the bank, man. Cash flow. If your income exceeds, your expenses have a positive cash flow. Let's say the money that you collect, if that surpasses how much you spend in a month, let's say you spend 500 and you get 1,000, right? You're like, man, I only spent 200, but I make more than that. You're making more than how much you spend. How much the stuff you gotta pay off, you make more than that. That's a positive cash flow surplus. Okay? If your expenses exceed income, that's negative cash flow. Let's say you spend a lot of money, bro. and your income is lesser than how much you spend, that's negative cash flow. Expenses, lifestyle. Okay. This is cash flow. Cash flow is your expenses, your lifestyle, rent, utilities, wages, rent, materials are crucial for tracking financial health and long-term taxable income. Expenses, lifestyle, rent, utilities, wages, materials are crucial for tracking financial and lowering taxable income. An asset is anything of value owned or controlled by an individual or business that is expected to provide a future economic benefit. An asset is anything of value owned or controlled by an individual or business that is expected to provide a future economic benefit. So money can be an asset too. Let's say you got $2 on you, bro. That can be an asset to how you want to make that benefit for your future. Do you want to make more? Because that's your decision. Assets are building block of wealth, and when subtracted from liabilities, debts determine net worth. Liability relationship with cash flow is often counterintuitive. Liability relationship with cash flow is often counterintuitive. An increase in liability is actually a source of cash, while a decrease in liability is a use of cash. An increase in liability is actually a source of cash, while a decrease in liabilities is a use of cash. Positive cash flow. When you can take out a loan or buy supplies on credit. Negative cash flow. When you pay off a debt such as a credit card or a mortgage, your liability decreases, but your cash flows out of business. Feel me? All right, let's go over it now. Let's see what we learned, man. What we learned. It says, like, increase in liabilities is actually a source of cash. So what is a liability? Your car's a liability. Your housing is a liability. You know? Your car can help you get to your destination, help you get to your job. If your car can help you get to the job, that's helping you pay off your rent and helping you exceed income and helping you have a positive cash flow. If your car is a liability, right? Increase in liability is actually a source of cash. If your car is a liability helping you get to your job, if income exceeds your expenses, you have a positive cash flow. I'm trying to tell y'all, man, this is good. It's good for to know if you have a bank account. This is good to, like, if you have a bank account and you're getting paid and you good right now, you know, it's certain circumstances that may not have this, you know what I'm saying? It's like, feel me? There's circumstances out here, man, that don't, you feel me, that don't have opportunity to take all this in, because it's really nonsense, you know? But if you have a bank and you have income going in the bank, feel me? This is good to learn, feel me? If you know how you're getting income, you're paying off whatever from the bank, this is good to learn outside, feel me? But you don't want to know about the bank. It's business, you know? Keep the bank Let the bank do what it do. You don't want to worry about the bank. All right, y'all. You know what then, folks? You can't see nothing, bro. You like that for sure. Hold on. What is financial education, really? All right, y'all. Why the rich play Monopoly, bro? You know, I said a topic. I was like, I'm spending too much money. I'm spending Monopoly. Like, you think Monopoly's a game? You think this money's a game? You just spending it. You're playing with it. Feel me? But when you play Monopoly, there's always a guy like, when you're spending too much money, you're in trouble. When you got enough money to know what you want to buy, and you're like, nah, that's too much. I got to keep this money because I can buy something better. Over the years, I have attended many seminars, conferences, and lectures on money. The speakers have had one thing in common. They made things complex, confusing, and frustrating. Many of them seemed to speak a foreign language. I suspected many used financial jargon not to communicate effectively, but to feel superior. They wanted to prove they were smarter than we were. Real financial education does not have to be complex or confusing. I think of the words often attributed to Albert Einstein. If you can't explain it to a 6-year-old, you don't understand it yourself. Real financial education can be very simple as playing Monopoly. So if you can't explain it to a 6-year-old, you don't understand it yourself. That's just a fact. Real financial education does not have to be complex or confusing. Feel me? You gotta write that down. Say if you can't understand it, if you can't explain it to a 6-year-old, you don't understand it yourself. So, hey man, if you're up to something and just think, if you think it, if you can like explain it to a kid, if you're trying to save money, and you're like, hey man, you want to save this money? This what you should do. Put this money here. Do not touch this money. Don't touch this money at all. You know, keep this money here. Don't touch this money, man. Okay, you want to save 50? Okay, I see you want to save the whole thing. Look, take this 20, bro. And put this $20 in the playground because you own the playground. That's your playground. That's where you go play on the playground. Hide this $20 under that dirt. And don't touch that. Don't touch that because you own the playground. Okay? Okay? Now this other money, that's your money. How do you want to use it? You know? You think about it. How are you gonna make more if you spend that? How do you go buy candy? Go buy a basketball with this $30. You know, but this $20, keep it in your playground because you own it. Fourth grade. Fourth grade. When you advise a young person, go to school, get a job, work hard, save money, and invest for a long term in 401k, what is missing is a little financial education on taxes. Feel me? Now, person who advised a young person to follow the go to school and get a job formula for success should also add, and you will pay the highest percentage of taxes. Man, I can't read this, bro. On to 10 years later, when I was 19. This guy said he played Monopoly in real life. He played Monopoly in real life. He owned a hotel with 5 golf courses with hundreds of employees on a property that includes five golf courses. All we did was play Monopoly in real life. What is Monopoly, bro? What is Monopoly? Is that why you and your wife developed your game Cash Flow to teach people how to understand investing? Yes. Kim and I were financially free by 1996. Kim was 37, I was 47. It took 10 years as a young married couple. We had started with nothing. We achieved financial freedom without jobs, without saving money, and without a 401k. This guy's crazy. He said, when people ask us how we achieve financial freedom, we cannot explain exactly how we did it. We even tried playing Monopoly with people in an attempt to explain the process we used that led us to develop the cash flow game, launching the commercial vision, 1996. It's time to strike. After a while, the workers know something is wrong. They smell a rat. Their wages are not rising. Union leaders call for a strike, demanding higher wages. The workers win. They earn more ordinary income. Higher wages make the company weaker. The company becomes a takeover target. The existing board of directors, the same people who made millions in portfolio income, agrees it is time for a change. They have made enough money, so they sell to a new owner. Once the company is sold, the new owners clean the house. Every often, one of the first things they do is fire employees. Laid off workers go back to school. Many taking on student loans, the worst type of debt known to man, hoping to find a new job, working again for ordinary income, and the gap between rich and everyone grows wider. Rather than going to union meetings, demanding more ordinary income, or going back to school for more ordinary income, the employees should have played Monopoly at lunchtime. They could have learned why the rent from a greenhouse was better than a paycheck. Tax lessons from Tom. Education taxes. When someone goes back to school to get a job, the cost of the education is not deductible. This is because they are getting an entire new profession if they go to seminars for financial education to improve their investing. However, the education can be deductible as an improvement in their business and investing skills. It's over, man. Hold on. It's over. Phantom income of the rich. Okay. Poor dad. I need my paycheck. Rich dad. I don't need a paycheck. Here is my suggestion. If you find this chapter confusing, partner with a friend, someone who likes math, and read this chapter on your own and then discuss the chapters together. If the concept of phantom income is still not clear, talk to an accountant and do your best to understand this very important subject. Without real financial education, most people are blind to phantom income. This chapter is very important because phantom income is the income of the rich, a higher level of financial intelligence. When I returned from Vietnam in 1973, Rich Dad suggested I begin my financial education by taking classes on real estate investing, get my real estate license. I asked. Rich Dad laughed and said, no, real estate licenses are not for people in the S coordinate. You want financial education for the I coordinate. Real estate agents work for ordinary income, and real estate investors work for portfolio and passive income. There is nothing wrong with having a real estate license, but more real estate brokers are not real estate investors. As Rich Dad often said, the reason they are called brokers is because they are a broker than you. At the time, I was still flying for the Marine Corps. One night after a night mission, I returned home to my condo in Waikiki. It was late, and I turned on the TV and caught an infomercial on real estate investing. The promoter promised to teach me how to buy real estate for no money down. Since Marine Corps pilots did not make money, the idea of buying real estate in Hawaii, some of the most expensive real estate in the world, for no money down, interested in me. I called the number on the TV screen and made a reservation for international free submarine. Rich Dad was a seminary. He especially loved Dale Carnegie courses. To him, they were practical, useful, and a relatively inexpensive investment in terms of both money and time. Rich Dad was not concerned with the teacher's credentials. He was more concerned about the teacher's charisma. If the instruction was boring, he was certain the Carnegie Company wouldn't tolerate it. They fired the instructor, so he was pretty sure that the instructors would hold his attention and teach him a few things. Poor Dad was especially concerned about their degrees and titles. He loved moving from high school, valedictorian, a bachelor of arts degree, a master's degrees, PhD titles, and degrees on point in the world of the E and S coordinates. Rich Dad was only concerned about achieving success in the B and 1 coordinates. Y'all know this stuff, man. In other words, we vowed, man. The liability will make us richer, not poor. The Porsche problem. This is where the problem of the Porsche came from. This Porsche problem was the same one Tom and I presented to the students of St. College. This very special car. How much? He said, how much I asked? Hoping he would say 200,000, to which I would say thanks, but I don't think he would. I'm still building up my asset car. No car for a car.